Well, in order to do that, since at this exchange rate there's a difference between supply and demand, they've got to make up that difference somehow. If they don't, if they just sit back, the market won't clear. You'll have sellers of dollars along this curve wanting to sell their dollars, and nobody would be buying them. And those sellers would offer the dollars for a lower price, and the exchange rate would fall. To keep that from happening, to keep this exchange rate prevailing, the Central Bank of China needs to make up the difference between supply and demand. And what does making up that difference mean? It means they got to buy dollars. Okay? There's more dollars being sold than being bought by everybody but the government, so their government or their central bank has to buy the extra dollars. What do they do with the dollars? They add them to their reserves. Their holdings of US dollar denominated assets of some form. It doesn't matter too much what form that is as long as it's dollar denominated. In practice, as I think we'll see later, what they tend to hold is US government bonds. An awful lot of that because they're very considered to be safe until we default later this summer, which we won't. We won't do. Don't tell your relatives, especially in other countries, that we're going to default. We're not. I wish. Anyhow, okay, so if they were keeping their currency undervalued and thus our currency overvalued, the action that they would have to take in order to accomplish that would add to their reserves. They would add to their reserves day after day, week after week, year after year. The reserves would keep rising. So in order to know if that's what they're doing, we just need to look at their reserves. And we will here in a minute. I forget whether we're getting to that quite right away. I don't think we are, but we will pretty soon. What are the implications of this for the economy? Well, keeping E, the way I've defined it here, was the price of the dollar. That's keeping the dollar overvalued, the Chinese currency undervalued. Oh, there they are. Okay, there's the reserves. China's reserves over this decade have indeed grown. There's been a couple of times when they stopped growing, but then they started up again. So that shows they were in fact intervening in the market. There's no other way they would have acquired those reserves. So indeed they must have had, and still have, an undervalued currency by this definition. I should mention there are other definitions, many other definitions, of over and undervalued. But if you simply define it relative to a free market, a free floating market, then they clearly have an undervalued currency because they are acquiring reserves. What does the undervalued currency do? Well, of course it changes trade. I've said that already. By keeping their currency cheap, they are keeping their prices low on world markets. So their exports cost less, their imports cost more, and it's going to contribute to the Chinese exporting more than they import. And of course exactly the opposite is going to happen for their trading partners. If they're keeping their currency low, that's going to cause other countries like the United States to export less and import more. So it seems to be pushing in the direction of that global imbalance that we saw before. And the same is true of all the other countries of the world. If they're keeping their currency cheap for us, they're keeping their currency cheap for Japan